So before I turn to them and I get them each to introduce themselves, I'd just like to get a sense of who is in the room. So could you do me a favor and raise your hand if you are a startup founder?
Nice.
Are you a startup founder that would like some money? Okay. Any investors in the room? Okay, a couple of investors. Check out the competition. See what's going on. So, my lovely panelists, I'm going to get you each to just introduce yourself, who you are, your fund that you represent, what you focus on, and if you can, because I know someone on the panel's recently raised one, talk about the most recent fund that you've launched. So, Natasha, on that note, I'm going to start with you.
Hi everybody, I'm Natasha. I work at a fund called Seedcamp. So as Cathy just alluded to, we've just raised our 6th fund, investing from angel rounds to seed, $180 million, investing all across Europe in all different types of businesses, so sector agnostic. We've been going for over 15 years. I've been at the fund for 7, which is a little bit scary thinking about that now. I'm like, dang, I don't think I'm next gen. I think I'm quite old by these standards. But yeah, very excited to be here with you all today.
Awesome, thank you. Yeah, we had this brief moment, didn't we, beforehand, where we're like, we're here to talk about next gen, but I think I'm a millennial.
Yeah. No, I know I'm a millennial.
I'm a millennial, definitely.
I think I'm living in denial. Anyway, Lina, do you introduce yourself?
Well, I'm definitely a millennial too. So, hi everyone, great to be here. Lina from Stride. We are an early stage fund. We back companies at seed. Operator turned investor. So previously headed up growth at Secret Escapes, and very, very excited to talk about, what's next for venture.
Awesome. And Keji.
Well, I am also a millennial, so I'll start with that.
Okay.
Hi, I'm Keji. I'm the Global Director of Brand and Community at Partech. Partech is a multi-stage, multi-geo, multi-sector firm. So we invest right from seed through to growth across 4 funds. We have about 2.5 billion assets under management, and I've been there just over 18 months, living my very best life.
Awesome. So I feel like the first confession is just that we're not Gen Z.
Well, see, we were true to the title at least.
Yeah, there you go. I think that's the only confession that we're maybe going to get out of the panel today. We'll see. Now, what I wanted to do is start by just having a little bit of a reflection on the last year. And I want to go into that for a little bit and then talk about the future. And let's be positive and take some lessons. The last 12 months, maybe 18 months, maybe at this point, been a bit tough in the VC world for startups. There's been a lot of hype, particularly in the media, around slowdown. There's been less IPOs. We've had a few banks go whoopsie. There's been a lot going on, and generally people have been a bit concerned. And I'd just love to get your thoughts individually. Is the hype real? What have you seen over the last 12 months? Keji, put you on the spot.
No, well, yeah, we've obviously all seen the headlines. There's been a lot of hype. I think for us at Partech, we were just discussing this earlier, we've followed the mantra that I live by, which is we hold fast and we stay true. So there's a lot of madness, but we really haven't changed our strategies. We just closed like a month ago, our new Africa fund at 245 mil, same strategy, investing from C to Series B. And so, yeah, we're just holding fast, staying true, and, yeah, watching the market. And we've never lost our head anyway. And one of the things people have always thought about Partech is like, oh, these guys are always really cheap or whatever, but we just don't believe in like overvaluated companies, so we wouldn't invest in them even if we thought they were great. And so we've just stayed true to that, which is kind of cool.
Lina, how does that compare to your experience?
I feel like the nature of venture and tech markets in general, I mean, it's constant up and down, right? There's micro sort of hype cycles. We saw it in crypto, for example. It comes and goes. And then, of course, there are the bigger trends, too. It's a long-term game, right? So I very much echo what Keji was saying. And there's this temptation to try and sort of stay ahead of the curve, move to the next hot thing, do the clever thing, get ahead of everyone else. But the truth is, you need to know what you're good at and what your strengths are as an investor, as an investment firm. And so I think for us, it's very much, we stick to our strategy, we stick to our knitting, we're not changing the course and getting distracted. And it's gonna come and go. It's like black tulips, in the Dutch golden age. It's hype, or the lack of it.
Natasha, I'm going to ask you two questions before you launch into. So last week I was in Sicily, or the last 2 weeks I was in Sicily. I was on holiday. I ate a lot of spaghetti, ice cream. There was a bit of pineapple, some pizza. Whilst in between all of that, the only news that I really paid any attention to was the fund and the big launch. So I'm curious to get your take on this, but also I'd love to know what the LP experience was like. What was it like raising given the current climate?
Look, I think we're fortunate because we're 15 years in, right? So we have a track record, and that is valuable. I think what we saw over the last few years was it was kind of difficult not to make money in tech, and there was a huge floodgates opened of everybody wanting to invest. You have lots of emerging managers starting up, which is amazing and great, and a lot of people who'd been making capital looking at ways to allocate it. So I think at both sides of the market, it was just a lot more buoyant, and we've seen that slow down naturally. I think turbulence is very much the kind of word of the year, if you like, but our sector rides that out and is totally equipped to deal with it. I think if there's anything that underpins like the tech ecosystem, it is resilience and ability to kind of adapt when you need to. And it's not just been the last 12 months. Like, let's not forget we had a global pandemic 3 years ago. It's actually been kind of 3-ish years, and like bring in Brexit. It's been a significant amount of time of constantly having to face new challenges. And it's not just been for us raising a fund in this last year. We closed Fund 5 in November 2020, so peak of COVID time, and we closed Fund 4 sort of off the back of Article 50 being triggered and Brexit. So, we don't, I don't know if we're like a bad omen when we go out to raise that something's going to happen. But, the positive thing for us now has very much been that we have this track. You guys can see the fundraising deck that we use to go out and raise Fund 6. It's on our website if you are interested in seeing that. We've got transparency is very important to us, so actually demonstrating what it is we're doing, hoping it helps emerging managers, but also showing returns, because ultimately we're fund managers, and that's the business that we're in, and that's what investors want to see. And so I think it's been much harder for people starting out and attracting LPs for those sort of Fund 1s and Fund 2, because, as Lina was saying, this is a long-term game.
Yeah. As you were talking about all of the different things that have happened over the past few years, do you feel tired? I feel tired. There's one thing after another. But you're right, there is a huge amount of resiliency, right? Everyone keeps going. Did you, for this fund in particular, did you change anything? Did you adapt based on the current environment? How has your approach differed at all?
Kind of similar to Keji. I mean, we very much, we know the world that we play in. It's early stage, it's high volume, it's sector agnostic, it's European first. That said, entrepreneurial mindset is a core tenet and one of our core values. So we're always looking at what do we need to be doing differently, because we don't rest on our laurels. The market's got way more crowded. The needs of entrepreneurs now and startups is very different to when we started out. So we're always thinking, how do we keep one step ahead? How do we adapt processes? Because we need to do that constantly to stay fresh.
Yeah. Lina, I think fund-wise, VC-wise, you're the youngest company on the panel. I don't know about age. I'm not going to ask. What do you think we could do? What ways can next-gen investors possibly change the VC model?
I think one theme I think a lot about is just seeing all these incredible breakthroughs that, LLMs, Gen AI, blockchain, underlying distributed ledger. I mean, we would be naive, I think, to believe that VC itself is not going to get disrupted at some point. And so you look at the funds like Quantum Light, Moonfire, AI-driven decision-making. You have tools like Spectre, sort of intelligent sourcing platform. And so you wonder, I mean, as in sort of what's a real innovation in VC itself? Like, how do we get better actually day to day? What does our operating system look like? And I think there's been, because we've been lucky with the markets, there's been a lot of sort of staying in the middle, right? We're selective, but we're not so much. Sometimes we lead, but sometimes we follow. We're price sensitive, but we can make an exception. Like, there's a lot of noise, and there's a sort of, it's just confusing for the founders sometimes too. And so I think knowing that, like, what is your strategy? Are you a full sort of automated solution where, even decision making can be, I wonder, like, am I getting replaced by a robot at some point? What is left, right? And I think on the other side of the spectrum, what we do at Stride, we're not indexing the market. We write selective tickets, 4 or 5 projects a year. It's hands-on, we go deep, it's artisan. That's what we do, that's what we're good at. It's real relationships with the founders. And so I think it's about knowing thyself, right? And you pick the battle. But I think anything that's in the middle, over time, I think it's gonna get disrupted.
Yeah. I'm now looking forward to seeing a headline around VC GPT and when that's going to come through. And if we are able to lean into technology in a better way on the venture capital side, could it fix other problems that we see quite often? So the traditional VC models often being criticized on the diversity and inclusion side of things. Keji, from a D&I perspective, new paradigm, what would you love to see happen or change?
I think 3 things I'd really love to see happen. One is I'd love all investors to undergo some sort of unconscious bias training.
Mm-hmm.
And I think it's really important because actually the questions that they ask different founders from different socioeconomic backgrounds or diverse backgrounds or the like, it's not the same across the board, and that's very clear. And I know that because I had the privilege of being in a fantastic seed fund before I joined Partech, and we underwent some training there. And actually what was interesting from the partners is then they looked at the questions that they ask founders, and they found that they actually asked different questions. So they were able to then systematize that and make sure that across the board they were all asking similar questions. So I think unconscious bias is really important training. I think, secondly, is a data approach. Like, if you lean more towards data, then you can make more objective decisions when you're assessing companies and assessing them on objective metrics as opposed to just the halo effect. And you're then assessing them on their potential for success as opposed to, like, what they've done before or, like, who they know and the like, which I think also makes it a more even playing field. And I think the third thing would also be just in terms of, like, the network. So every VC has, like, great networks around them, right? Like that they leverage for the benefit of their portfolio. But actually, if you look at those networks, if you ask 4 investors, like, who's the best pricing expert, it'll all be white males. And I think that is a really interesting thing because if you're putting the same profile in front of your portfolio companies all the time, chances, what will usually happen, for anyone who's not aware, a company comes and they say, oh, we need a SaaS sales, B2B SaaS expert. You put all these profiles in front of them, and then they'll probably end up working with one of them and bringing them on board as an advisor, and then opening the door for them to be able to make investments if they want. And so you're kind of perpetuating the problem because you're bringing the same profiles and they're getting the access and they're seeing the companies. So I think, like, really diversifying your networks and, like, going further afield and not just calling on the same names all the time. That's something we're working on at Partech. We'll be able to share a bit more about it in the coming months, but really excited about that because I think that makes a huge difference too. And it also helps, like, when you're thinking about board composition, if you're putting diverse mentors in front of people, that's their networks as well that they can reach out to. It helps with, like, team composition, so many different things. And then just diversity of thought, which is also, like, super critical. So I think if we could address those 3 things, or at least try to, I think we'd be off to a good start.
So move significantly beyond capital.
Yeah, completely.
Right? Yeah, game changing. So we have very little time left my lovely panel.
Time flies.
I know, it really does. So I've got one more question for you, which I think is potentially helpful to the startup founders in the room, because we all know what happens after one of these panels. You're all going to get hounded outside because someone's going to want to come and have a chat. So what's hot right now, for you in your firm? What are you looking at? Where is your focus maybe over the next 12 months? You choose. Natasha, I'll start with you.
Yeah, so one of the things that we've actually been doing differently and trying to sort of be a bit more productized and systematic, and I think at Seedcamp is actually producing quarterly investment memos, because as a sector-agnostic, very high-volume fund, we are investing in so many different things, and we can get carried away, and we look at the sort of portfolio mix, and it's, we've been over-indexing on this. So now we're actually more proactively looking each quarter at, where have we been investing, and where do we see opportunity or where we want to double down. So for us, kind of looking at this quarter, it's very much climate, cyber, health, and naturally all things AI. But I'm going to caveat that and say that we have been very actively investing in businesses using different applications of AI across all sectors for a very long time. We actually ran an event in 2016 where we said AI is now and AI is going to be the new mobile. So I'm like, well, we were a little bit premature, but kind of the world is now catching up. And that's our job, right? As early stage investors, we have to be predicting these things and investing in it before it becomes mainstream.
Yeah.
And if we're not, then we're failing.
Yeah, yeah. I'm just wondering how much more niche technology can get. Wetsuit tech, alloy tech, I don't know. I'm just pulling up some random words here at this point. Lina, same question to you. What are you looking for over the next
LLMs. I think at Stride, we think a lot about intentional venture. And I think there's a spin of, impact investing, positive, world first. I think for us, are you trying to solve a real problem in the real world? Is it intentional? Is it good for us? I think there's a lot of responsibility, actually, that we as investors should take on when it comes to, the planet we're creating. And so it's not just climate, by the way. It's not just tech bio. It can be anything, education, technology. I think the important thing is there real intention behind the project, and why are you starting to begin with? Because at early stage, it's a long, tough journey, right? And so having that grit and that real passion that drives you, that's what we want to see.
Awesome. Keji, same question.
What are we doing? So we're holding fast, staying true. The main thing that we're really focused on is really thinking about the sustainability piece and how do we help early stage companies think about how they grow sustainable businesses right from the start. That includes helping them look at their ESG. We've just hired a badass chief sustainability officer that's really going to help us look at our internal practices, but also how can we start helping the earlier stage portfolio companies think about that, and not in an arduous way. They've got a lot to do already. They're building, from scratch. But how can they start injecting those practices, from their team composition to the products they're even building, and making sure that there's a good diversity of eyes contributing to that. So I think that's a big thing, helping our companies think about building sustainable but profitable businesses.
Awesome. Well, I think you'll all agree with me. There's lots of positive messages coming from the panel today. I'm going to thank you in just 1 second. They will be leaving that way. Don't go all at once. Have a conversation. See if they can help you scale to the moon and back.
Unless you have a Shih Tzu, in which case I do want to talk.
Oh, yeah. There you go. All right. Thank you all so much. Please, a round of applause for the panel.
Thank you.
Thank you.